Hello everybody, back once again with another dividend snapshot, and this time it's no other than the well-known Apple. But if you don't know them, Apple designs, manufactures and markets smartphones, personal computers, tablets, wearables and accessories worldwide. It also sells various related services such as Apple Care, and year to date they are down 28.5%, so it's taken quite a beating alongside a lot of other stocks. So let's check if it's a good time to buy. It has a market cap of 2.15 trillion, and at the current time of recording, it trades at a share price of $130.06. It has a forward non-GAAP PE ratio of 22.05, so it's not below that 20 threshold that I would like it to be at. But compared to the average 5-year PE ratio, it's exactly a small bit below. It does have revenue growth over the last 5 years, a lot actually, and the profit margin is well above the 10% I like it to be at. It's at staggering 25.8%. It also has net income growth, and the share buybacks are being done because they have reduced their shares outstanding by 20% over the last 5 years. It has a dividend yield at the current time of recording of 0.68%, so it's a really early grower, and the payout ratio is a very, very healthy 14.29, so there's plenty of room to grow the dividend in the future. It has a dividend growth rate of 8.75, so that's really nice to see. It's definitely a check. And the dividend growth history is for 9 consecutive years, and it's only been paying out dividends for 9 years, so I have no doubt in my mind that they will continue to do this. But for the current time of recording, it's unfortunately a negative, and the dividend per share is thus increasing. It does have very good free cash flow growth, and the long-term liabilities are easily coverable by 5-year free cash flow because they can do it in 2.3 years if they wanted to. The price to the free cash flow is not below the 15 to 20 mark. It's at 31.5, but there is a story here and I'll get back to it later. And the fair value thus is not there, but it is Apple. They are trading at a premium, so I wouldn't be too worried about that. But before we go into the verdict, if you did enjoy the video, please leave a like and consider subscribing to the channel for more content in the future. It really helps me out a lot and I appreciate all the support I can get. And let's get into the verdict, which is 9 checks out of 14. They are a well-known company. They are trading at a premium, so I doubt that we will ever see a perfectly fair value for Apple. I think 22 in PE ratio is a fairly good place to enter, and the dividend growth, I wouldn't be too worried about that because they will keep growing, and this is a company to hold for many, many, many years, and the dividend on course will be really, really high when you get there. So for me personally, I think it's getting really close to a very, very, very attractive price to buy in. I would like to see it at around 125 or a bit lower, but it is a perfectly fine time to buy into Apple, I would say, because they do have high levels of profit and they have so many innovative products. They have plenty of money in their free cash flow to invest back into themselves, to develop new products, to grow the dividend, to do share buybacks, and they just have a lot of money on hand to do all the things they need to do. It's an extremely strong brand, and the brand loyalty from Apple consumers are sky high, I would say. So definitely a company to watch out for. So let me know down in the comments if you're thinking about buying Apple, and thank you so much for watching, guys. I really appreciate all the support I can get from you out there, and I'll be seeing you in the next video. Bye.